And that means that oil prices will be set to explode higher, and there'll be nothing we could do about it. Just imagine if we actually got a legitimate shortage, if something actually happened where we would have normally liked to have utilized those reserves in a legitimate emergency instead of the political emergency that Biden faced. And in fact, had we not sold all that oil from the Strategic Petroleum Reserve, maybe the Democrats wouldn't have done as well in the midterm elections, because people would have been a lot more pissed off about inflation when they were driving to the polls with even more expensive gasoline than what they ended up paying. But the other factor that contributed to gaining GDP in the third quarter, in fact, the only factor, because if you X that out, GDP contracted yet again, was that the trade deficit was much lower than expected, partially because of the export of oil from the Strategic Petroleum Reserve, but also because of the strength of the dollar that made our imports less expensive and so shrank the trade deficit. That dollar strength is already reversing, and by next year it will start subtracting even bigger numbers from an already weakening GDP. We continue to get more economic data that confirms that the economy is in fact in recession. It's actually a stealth recession because nobody wants to acknowledge that it's actually here. And of course, we did get positive GDP growth in the third quarter, so that's also throwing everybody off. Remember, when we did have 2 negative quarters of GDP, they still denied that we were in a recession. So now that they got a positive quarter, it makes the denial even more plausible. But again, when you look into the reasons for the positive number, it's all temporary. It's all the result of exporting oil from the Strategic Petroleum Reserve, which I think is now at the lowest since 1982 and continues to be drained. By sometime next year, it will be completely empty. There will be no more strategic oil left in that petroleum reserve. And that means that oil prices will be set to explode higher, and there'll be nothing we can do about it. Just imagine if we actually got a legitimate shortage, if something actually happened where we would have normally liked to have utilized those reserves in a legitimate emergency instead of the political emergency that Biden faced. And in fact, had we not sold all that oil from the Strategic Petroleum Reserve, maybe the Democrats wouldn't have done as well in the midterm elections, because people would have been a lot more pissed off about inflation when they were driving to the polls with even more expensive gasoline than what they ended up paying. But the other factor that contributed to gaining GDP in the third quarter, in fact, the only factor, because if you X that out, GDP contracted yet again, was that the trade deficit was much lower than expected, partially because of the export of oil from the Strategic Petroleum Reserve, but also because of the strength of the dollar that made our imports less expensive and so shrank the trade deficit. That dollar strength is already reversing, and by next year it will start subtracting even bigger numbers from an already weakening GDP. Plus, as usually is the case, the inflation number that they used to deflate the GDP in Q3, the GDP deflator, was actually much lower than what I believe the actual rate of inflation was, or the increase in consumer prices during that quarter. So that is exaggerating the economic growth, because if you can make believe that inflation is lower, then you simultaneously get to pretend that GDP growth is higher. And that's another reason that the government has to lie about inflation, because not only do they fool the public into thinking that inflation isn't as bad as it is, but at the same time, they get a twofer, because that also means they get to lie to the public about how strong the economy is, because they get to show a stronger GDP number than what they would show if they had an honest inflation number. But looking at the data that came out over the last few days, yesterday, we got the Kansas City Fed Manufacturing Index, and in the month of October, it was -7, and in the month of November, it came out at -6. Sure, slightly higher than the -7, but still a negative number. That indicates contraction. Also, Today, we got the industrial production numbers for October, and there we were supposed to be up 0.2. Instead, we dropped 0.1. And adding insult to injury, we downwardly revised the prior month's number, which was originally reported at up 0.4. That was up just 0.1. So you're flat now over 2 consecutive months for industrial production. And again, why this is bad is because if you're trying to fight inflation, one way to make the job easier is to increase the supply of goods. Because remember, prices go up because you have too much money chasing too few goods. Well, one way to help alleviate the upward pressure on prices is to have more goods. But if we're not producing more, then we're not going to get more. And if you look at manufacturing output, that was supposed to rise 0.2. Instead, it rose at just 0.1. And again, the prior month's number was revised from up 0.4 to up 0.2. These are very low numbers. And making it worse, look at the capacity utilization rate. It sank from 80.4 all the way down to 79.9. That is a very weak number, indicative of recession. And in fact, the prior month's number was revised from what was originally reported as 80.3 down to just 80.1. But an even worse number that we got today was the Philadelphia Fed Manufacturing Index. That was supposed to come out at -7, which would have been a slight improvement over the -8.7 from the prior month. But any negative number is consistent with recession. You want a positive number if you want a growing economy. And so we got a negative number, but the number that we actually got for November was -19.4. This was below even the lowest estimate on the street because the consensus range went from -15 to -5. So nobody thought this number would come out positive, but nobody thought it would be this negative because the economy continues to surprise people by being weaker than everybody expects. Also yesterday, we got the Kansas City Fed Manufacturing Index for November, and there was a bit of an improvement over the prior month. We got a -7 in October, and it came out at -6 in November. Now, I'm not really sure what the expectation was, but still, you have back-to-back negative numbers. All these numbers would be positive if the economy was in fact growing, but the fact that all these manufacturing numbers are coming out negative indicates that it's contracting. And again, this is complicating the Fed's inflation fight because the one thing that would make that fight easier to win would be an increase in the supply of goods, yet all the manufacturing numbers are going in the wrong direction. Now, there was one piece of positive news, at least the way the market took it, that we got yesterday, and that was retail sales for October, which jumped up more than expected. The consensus estimate was for a rise of 1%, and that would have been a big improvement over the flat number that we got the prior month. Instead, we got an increase of 1.3%, inside the range of expectations. In fact, the high end of the range was 2%, so we didn't even come close to that. X vehicles, it was an even bigger beat. The expectation was up 0.5, and we got up 1.3. That did exceed the high end of estimates, which went from up 0.2 to up 0.7. And if you take out gasoline in addition to vehicles, there the rise was much bigger than expected, up 0.9 versus expectations of just up 0.2. And the prior month was revised from up 0.3 to up 0.6. So people would look at these numbers and say, hey, Peter, you're wrong. Look at these retail sales. They're really going up. Well, number one, none of these numbers are adjusted for inflation. So they're very deceptive because I think the main reason that retail sales are up is because prices are up. So again, this is not people buying more. This is just people paying more. And in fact, in many cases, they're actually buying less. They're just paying so much more that retail sales are up in dollars, but they're down in volume.